Time for the market report, a big development recently.
And quite unexpected. This month's WASDE report made major waves in the markets. We'll get into it, but first, the numbers. What were the week's biggest gains and losses? And then, this month's WASDE report. What were the biggest takeaways? And finally, the fallout. Two market experts help us understand what the traders are thinking now. So, markets closed the week with a turnaround. Most commodities up with a few exceptions. Let's take a look. The week's biggest gain, soybean oil up over 5.5 cents, an over 14% increase from the previous week. That is a big move. The week's biggest loss, sugar, down nearly 0.5 cent, a near 2.25% decrease from the previous week. So this month's WASDE report dropped, and boy did it drop. Some big adjustments in soybeans and corn making the biggest impact. But before we hear from the experts, here's Bella Bingham with what it said.
U.S. wheat supplies up due to higher imports. Feed and residual use unchanged while seed use up 2 million bushels. Exports unchanged while ending stocks up slightly. Season average farm price $5.55 per bushel. Global wheat supplies up slightly due to higher production in Syria and Pakistan. Consumption slightly down along with trade due to less exports from Russia and Ukraine. Ending stocks slightly raised. U.S. corn production and total use down. Feed and residual use also down while exports cut 25 million bushels. Due to this, stocks lowered 198 million bushels. Season average farm price $4.25 per bushel. Global corn production up mostly in China, Ghana, and Russia. Ending stocks down slightly by 3 million tons. U.S. rice production up, biggest increases in Texas and Missouri. Yield estimated a record 7,748 pounds per acre. Domestic and residual use also up while ending stocks lowered. Season average farm price $15.60 per hundredweight. Global rice supplies down slightly, mostly due to lower production in China. Consumption also down along with trade. As a result, ending stocks down 0.3 million tons. U.S. soybean production down along with harvested area. Yield estimated down by 1 bushel per acre. Imports slightly higher while exports unchanged with crush. Ending stocks down 90 million bushels. Season average farm price $10.20 per bushel. Global soybean exports unchanged while crush raised. Ending stocks down due to lower stocks in Brazil and the U.S. U.S. beef, pork, broiler, and turkey production all lowered in the fourth quarter 2024. Egg production also lowered due to HPIA flock culling. For 2025, beef and pork production forecast estimate increases, while poultry production estimated lower due to continued culling. U.S. milk production lowered due to less inventories and milk per cow. 2025 forecast predicts continued slow milk output. Butter, cheese, non-fat dry milk, and whey prices projected to increase. 2025 all milk price forecast $23.05 per hundredweight. U.S. cotton production increased due to higher national yield. Projected exports lowered while ending stocks raised. Season average farm price 65 cents per pound. Global cotton production up mostly due to increases in China's crop, while larger crops projected for Australia and the U.S. Consumption also raised due to increases in Bangladesh and Vietnam. Projected exports and ending stocks increased.
Now, I know all that data may make it seem like what the report said was no big deal, but keep in mind that these adjustments to row crop numbers in particular caused a big market shift. Analysts Ted Seifert and Matt Bennett give us an idea of what the buyers and sellers are thinking right now.
Trade expectations come from analysts like us, and when we're asked by the news agencies, they're not asking us what we think the U.S. national average yield is. They're asking us what we think the USDA is going to say on this report. And that's a big difference, because I think the market had been factoring in numbers, yield numbers, production numbers, carryover numbers that were lower than what the average trade guesses were. There's a lot of people that have been pushing long positions for quite some time, expecting to see eventually the numbers that we saw today. Now that we have them, it really makes you wonder, are they going to continue to buy this market? Is there a reason to be bullish longer term? Or was this just the final realization of what we've been talking about since, well, corn's low was in August, beans was in the middle of December. You know, so I don't know. That's something that I'll be wrestling with for the next few days and going into next week.
You know, some farmers like, hey, you know what? If I could get to 470, I'd go ahead and sell some corn. Well, guess what? you had your opportunity. But in a day like this, sometimes if you don't have your offer in, you're not going to get a hit. You know, when I saw this report today, I thought it was pretty interesting. You go back to some of the things Ted was talking about that we've seen over the course of time. Obviously, excessively dry August. We know it robs some bushels, but the other thing is the moisture content coming out of the field. I mean, a lot of 11 and 12% corn coming out of the field, 9, 8, 7% beans. Those things factored their way in eventually, but a 3.8 bushel yield drop for me in January is quite interesting, that we're just now figuring out that it's a 3.8 bushel yield drop. Last month, you raised demand 200 million bushel. You took 75 of that back this month before this, but bottom line is today, it was somewhat of a gift for the grower. I mean, quite frankly, I hope that the grower will look at it as a gift, because a gift's not a gift unless you accept it. So I think we've got to at least take a look at this. You know, and what's basis going to do from this point forward? I mean, you've got to assume, you know, with an end user that has bought a lot of corn here in the last few weeks, basis is going to have to widen out here whenever you take this kind of a jump up in the market.
And that's it for a deeper look into the markets. There's an energy surrounding row crops right now. Don't know how long that'll last, but we could see a rebound in prices.